Hello everyone, this is the night of 25th September 2017. This is an attempt to analyze the Indian stock market week ended, that was Friday 22nd of September. I was actually planning to start off this for quite some time, but as everything under the sun needs a trigger, the sharp sell-off this week triggers me to start this endeavor of sharing my weekly views with everyone. Like always, it's been my experience that whenever the market cracks, a lot of people whom I have interacted before, especially those whom I have trained, um, remember me, reach out to me and ask for my view. That's very sweet of them. So, keeping that in mind and appreciating that, my task of sharing view of the Indian markets week ended 22nd September. Let's start off with the weekly charts. It was quite a week, sold off quite sharply thanks to the flow of news between the US and the North Korea. What do we see over here? What I've been asked is this a double top or not? Well, it looks like a probabilistic double top, which is kind of an Adam and Eve double top. You see this first top is more like a V and this one is taking the more like a rounded shape. I use the awesome oscillator at the bottom to understand the underlying momentum, and for almost 6 weeks this momentum has been easing off, suggesting the fact that the market is going up but it's just dragging itself on the upside. Simple Japanese candlestick parlance, we have an engulfing. The way to trade an engulfing is you wait for this low to get breached, and if that happens and the market stays below the level of 99.50, we can expect a move further on the downside to the tune of the length of this candlestick, which is 99.50 on the downside and 1150 on the upside. That's around 200 points. We are looking at around 97.50. So 97.50 will bring us close to the previous low. 97.50 will bring us close to almost a completion of the double top, and probably a break of 97 will set in fresh triggers on the downside. Well, that's what the weekly chart suggests us, and let's break it down and look at the daily. Friday was one killer of a day, and there was no sign of any intraday bounce back at all, which to some extent we saw Thursday. But Friday it was out and out a day for the bears. They have been waiting on the sidelines for quite some time, but I think Friday was their day for sure. Keeping in mind that the close was near the lowest point of the day, the momentum was fairly high. I sense that they are not going to give it away that easily. I mean the bears. A market may try and give a bounce back, but it needs to do a lot more. It was almost an opening high for Friday's day. Look at the opening and the highest point. So this psychological level of 10,100, which was close to this high, acts as a crucial short-term resistance on the upside. As long as this Friday's high is not taken out, I sense that the market is likely to stay under some selling pressure. On a rally, on a short-term rally, 50% mark of any long candle actually plays an important role, so which is close to that 10,050 kind of zone over here. We'll look into the intraday chart to figure out. So 10,050, obviously the psychological 10,000 level acts as the short-term resistance on the upside. Big range expansion, which clearly shows over here from my ATR one indicator that it has been a sharp rise in the range of the market. At the last week's low, it has come back to those kind of erstwhile resistances. You know, if you go back close to that mid-August, we notice that 99.50, 99.80, this zone acted as pretty decent resistance. It broke out and now we are back to that zone. And we know that thanks to the principle of polarity, once the resistances are broken, they do act as source of support. So yes, index is coming down to support, number one. Yes, the selling has been sharp with very high momentum, number two. So I sense that before, even if it decides to bounce back, there has to be some ease off. And by ease off on the charts, you will start to see much smaller candles, which will probably look like this over here. Shorter, smaller candles like spinning tops, before the market probably decides to either continue on the downside or bounce back. Considering that the weekly momentum as well as the daily awesome oscillator has turned momentum on the downside, a little bit bias stays for selling pressure to set in further. A quick look into the intraday chart, and let's move into the 60-minute chart for the Nifty. Yes, it's a little cluttered because I have multiple indicators over here, and I'll just quickly show you the 10,050 mark over here. On the upside, any bounce back, expect some kind of halt close to that 10,050, 10,060 zone. It's where my trend indicator, the 89 EMA band, also comes into. So short-term bounce back, 10,050. Break off the current lows, and from a short-term point of view, we sense that it's likely to hold this 99.40, 99.50 zone. And from a medium-term point of view, we know that there are ample space on the downside for the index to fall further down. Quick look at the bank nifty, and a similar picture over here. Similar kind of double topish formation, similar engulfing pattern, says it all. And again, similarly back to the supports. The sell-off was on high momentum. Momentum has weakened. So any bounce back, a short-term bounce back, anyone who's looking to buy the market the first half of next week, Monday, Tuesday, please make sure that the long trades are very short-term in nature. And if you get a good opportunity to sell on a rise, be my guest and do so, because I think shorts will have a good risk-reward ratio. Let's quickly look into how the indices panned out. So I'll be using the report designer. By the way, I'm using the Iris Plus software from the Spider software, guys. I'm going to scan and quickly check the 1 week, 4 week, and 12 week performance of the NSE indices. Quick run. Here we go. Look at the ones which actually cracked was the real estate. Big crack over here. Let me change this chart to weekly. All right. Metals, the big outperformers for multiple months, now cracks quite hard. PSU banks have been facing the heat, and I sense that the PSU banks will fall further if the index fails to bounce back, because it's kind of a head and shoulder topish pattern that the index, Nifty PSU bank index, has broken on the downside. Commodities, the mid caps, small caps, these are the ones which dragged the index last week. On the upside, it was the pharma and the IT. Pharma and IT are the two spaces which held really well, and between these two sectoral indices, I am quite keen at the Nifty IT index. It looks like a coil to me. Upsides are kind of capped in this zone, but the lows are getting higher and higher, and this kind of formation tells me that there is possibility of move on the upside. Few stocks that I'm keeping a very close watch this week is HCL Tech. Look over here. The index is, the stock is in an uptrend. It's been slowing down, and I sense that a breakout above the 900 level can bring in some fresh momentum. All that the stock is doing now is this big move is getting consolidated. A breakout of 900, you have an assumption of the move on the upside. Let's look at Tech Mahindra as well. And Tech Mahindra, you'll notice that the weekly chart is exceptionally strong. Tech Mahindra, on the other hand, on the daily chart has made a spinning top. It's kind of an inside candle, though the range has just inched out a little bit on the upside. One worry about Tech Mahindra is the fact that this was a previous support, and the index, the stock has gone over there, so it's kind of facing a little bit of resistance on the upside. What about the biggies, the TCS? Well, TCS also is on the verge of a breakout. This is a weekly chart, and we can clearly see that 2550 has acted as a level of resistance. So look at the daily chart, clearly over here the level of 2540, 2550, a breakout. There you go. TCS can perform. Infosys, on the other hand, actually cracked with the market on Friday's trade. It has been in a downtrend for quite some time, underperforming. Underlying momentum is picking up for sure. This is your daily chart. This is your weekly. But net, I think TCS, Tech Mahindra, HCL Tech stands out far better. Pharmaceutical stocks have moved really well, and I sense that they might ease off. Dr. Reddy over here, DV's Lab, exceptionally strong move. Glenmark, relatively better, still some scope on the upside. Sun Pharma have moved over this band that I was closely watching, and it's holding really well. I sense that Sun Pharma is a good breakout candidate on the upside. And Lupin. So I sense that between these two indices, which held really well, on the other hand, bucked the downtrend in last week's trade. Pharma, I think Sun Pharma, Lupin has some scope, but IT is something that I'm closely watching. As I said some time back, that short-term approach for any long trades, the ones which were beaten down is likely to bounce back, but the ones which held is likely to extend their move, and close watch on both HCL Tech and Tech Mahindra for sure. Thank you for watching this video. This was my first attempt, and going forward I plan to improve these videos and come to you end of every week with my view on the Indian equity markets. Thank you. Please feel free to share your suggestions and feedback. Thank you. Trade well, trade wise.